Adam Coons is with me, Chief Investment Officer at Winthrop Capital Management. As markets are at new highs, are they too frothy? Where are the bubbles? We have so many questions for Adam today. It's good to see you. Welcome back.
Thanks for having me.
So how are you feeling about this market now?
I mean, like you said, it is frothy, so it does feel a little bit extended. But when we look at the economy and the real data signs, it's hard to see a case that the market should be going down or anything but what they are doing. Housing has the data out of sales and housing was better than expected.
Yeah.
The employment numbers, look a little shaky here and there, but generally speaking, the consumer's still spending normally, and all signs point to the economy is still relatively healthy.
Yeah, it's still chugging along. It was interesting when I saw the OECD report yesterday. It was talking about the blow that's coming from tariffs, and at the same time, you have the Fed raising their GDP numbers. You've seen the resiliency of the economy thus far. Sort of where do they get that from? Because a lot of the folks who come on don't necessarily think the tariffs bring on lots of inflation.
Yeah, I'm in that camp. I think generally speaking, tariffs, I think are overstated. I think people think, too simplistically about it that, an iPhone that costs $1,000 is going to be 25% more or whatever.
Right.
And really, it's not the price it's sold to you, it's the component price. So I think the impact from tariffs generally is overstated. And I think even if we did see, a rise in prices because of tariffs, consumers don't necessarily have so much discretionary income that they can just say, hey, we're just going to keep buying like we were. They're going to have to make different decisions. So
right.
Overall, I think all that just pushes inflation lower. And I don't want to say that we're going to see disinflation or anything like that, but I think the rate of inflation is just going to stay in this general kind of 2 to 3% area.
And there's also this feeling, too, that fundamentals have been pretty good with earnings and such, that we're not necessarily seeing bad news ahead, right?
Totally. I mean, the reason the stocks are up is because they are hitting their earnings expectations. The earnings that are coming out are positive. And so until we see that change, there's no real cause for the stock market to go down.
We had a great market drive over the weekend. We were asking the folks what they're most concerned about. On that was economy and tariffs and debt and deficit. They seemed more worried about trade and tariffs and things like that. But the debt and deficit certainly got enough votes. Are you worried about that? I know that the administration's trying to bring rates lower so that they can handle some of that debt or refinance some of that debt. Your thoughts?
Yeah, I mean, the refinancing of the debt, that is troublesome, primarily just because there's just not that natural buyer that we've had in the past. So when you're looking at $7 trillion or so of treasuries that are going to mature that you're going to have to refi, it's hard to see who's going to buy those, or at least pay up for them. And so they've already said this, they're going to have to issue more short-term debt until rates come down. But you've seen the foreign buyers continue to shrink. And so it's just difficult until the Fed decides they're going to start buying securities. I do think it's going to be difficult for the market to clear and digest all of the issuance that's going to have to happen. And so what that really means is there's probably a floor on how low rates can really go.
Mm-hmm. I want to get to some of your picks here. I see tech and cybersecurity, but just a quick thought. As President Trump yesterday was talking about Ukraine and maybe that Ukraine can really fight back with the help of Europe, and then there were folks who said maybe defense stocks are back. I don't mean a defensive play, I mean actual aerospace and defense stocks. Is that something that you follow closely? Did you like that group?
Yeah, and so you saw defense companies run up just with Trump coming in office, and you saw geopolitical issues start to pick up, and so that made sense, right? If the geopolitical environment is shaky, those stocks may see a rise. I think that's fully priced in for the most part right now, because overall, I think we're moving towards de-escalation globally than escalation. You may see spending from different parts of the world, but the spending is shifting, and it's to lower cost things and more unmanned robotics and those sort of things that could actually drive the overall spend down over the long term. So I think right now I would stay away from defense stocks because, like I said, just from evaluation and where they've run, it's just a little too far.
And that's not where you see the growth. I mean, you were talking about Alphabet, Google, Fortinet, CrowdStrike, and Reddit. So in the tech realm, I'll start with the first bunch, which is the Google and the cybersecurity names. Some of your thoughts.
Yeah, so I mean, look, the AI story isn't going away. Do I think it's overblown and overused? Absolutely. But we really like the big players, the hyperscalers, to use the term everyone is using right now, because they're not a one-trick pony. They're not, they're using AI to enhance something that they're already doing, versus those names that really have only one thing that's just completely anchored to AI. So it's either going to be, like I said, in the big software names, but then on the security side, obviously, as it grows, as the pie grows, there's going to be a need for more complex security. So that's why we like CrowdStrike, Fortinet in that space.
Understood. And where does Reddit fit in?
Well, Reddit fits in as kind of that contrarian name that not a lot of people know. But when you look at the growth that they've had, and I really, from a valuation standpoint, it's one of those rare names in tech that stand out. So for us, it's one of those, it is a little bit of a long shot, but we like it, like I said, from a valuation and the overall trends to that website.
There he is in person. Thank you so much, Adam, for being here from Indiana today. Thank you, Adam Coons, Chief Investment Officer at Winthrop Capital Management.